Okay, hi everyone. Good evening. I'm very honored to be the host for today. So my name is Xiaowei and I'm a dealer in Phillip Capital. So before I start today's webinar, firstly, I'd like to do a sound check. So yeah, over here, I've launched a poll. Can you all hear me loud and clear? If yes, then you press yes. Then if no, you press no. Okay, I think everyone can hear me. Okay, so I'm going to start today's presentation. So before I start today's presentation, I would like to claim that today's webinar is only for education purpose. Therefore, if you guys would like to seek for any financial advices before placing any trades, please find a professional license holder before you do so. Okay, so to kick off today's webinar, first, I would like to walk you all through our company history. So you all might heard of us previously known as Phillip Futures, but over the recent year, we have changed our company name to Phillip Capital Sdn Bhd. And one of the reasons was because we are currently a dual license holder right now, meaning to say that our company, Phillip, now can offer not only futures products to our client, but we also can offer stock broking services as well. So our company, Phillip Capital, was incorporated in 7 October 1995. And our company is a wholly owned subsidiary of Phillip Capital Holdings Sdn Bhd. So you all can know Phillip as a trading participant of Bursa Malaysia Derivative Berhad, also a holder of Capital Market Services License, CMSL, and also a participating organization of Bursa Malaysia Securities Berhad. So to put it in short, basically our company is an official license holder that is appointed by the Bursa Malaysia. So as you can see over here on this slide, you can find our company all across Malaysia, starting from our headquarters located in Kuala Lumpur, followed by we have 11 branches all across Malaysia. We have branches in Alor, Penang, Kota Damansara, Melaka, Taman Sutera Utama, Skudai, Taman Molek, JB, Kluang, Kuantan, Kuching, Sibu, and Kota Kinabalu as well. So we would like to extend our thanks and heartfelt gratitude to all of our clients, as without your continuous support in believing in us, using our trade platform to trade, engaging our services, we will not be able to achieve what we had today. Okay, so moving on, you can find our company all across the globe. We, Phillip, has very wide global network, all the way from France to China, Japan, US, Singapore, Thailand, and etc. as shown on this slide above lah. Okay, therefore, as you can see over here, we have our product offer all the way from Euro exchange. We also have Japan exchange products. We have Hong Kong exchange products, Singapore exchange, Bursa Malaysia, ICE, and also CME group products, which is Seaboard, Comex, and also NYMEX. So we believe we actually aim to be a one-stop solution for our clients, as our company are not only able to offer futures products, but also stocks and CFD products as well. So as you can see over here, we have products on futures, equities, and also CFD. We have index futures, agriculture, metal, energy, interest rate, while for stocks, we have Malaysia shares, US shares, Hong Kong shares, Singapore shares, Australia shares. For CFD, we have Bursa, New York Stock Exchange, NASDAQ, and also US Index. Okay. So for investors who are new today, one of the added assets that we, Phillip, can offer to you all is that our company is an award-winning multi-asset broker. And not only that, we also offer 24 hours dealing support. We also have advisory services to our clients. We provide latest market news to our clients. We also have white products for our clients to trade on, as shown as earlier above. And our account opening is totally free of charge. Okay, so for investors who are new here today, don't be overwhelmed with all these investing products and as we Philips, we offer free one-to-one coaching session, and we also have ongoing seminar, free seminar and webinar in the future to learn together with our clients. Okay, so in our one-to-one coaching session, we teach our clients how to trade on futures, how to trade on CFD, how to trade on stocks. We also let them know about the product knowledges. We also teach them how to use our platform efficiently and understand more on the charting system lah. Okay, so for clients who are interested to learn or join our events, you guys can scan this QR code to register for upcoming events lah. And also, we also have a weekly market call on market views, as well as live counter technical analysis by our dealers, where they will share their product knowledge on trading. They will give you an insight on how they actually view the chart, what kind of analysis they are using, and etc. So you guys, those who are interested, you guys can scan this QR code to follow them on their talks on market views and also live counter technical analysis. So for investors, for you guys who are interested to open an account with us, you guys can actually scan this QR code as you've seen on this slide to open an account with us online. Okay, so we Philip, we have our own trading platforms. Over here, we have Philip. For investors who want to trade in futures, we have Philip Nova, where our Philip Nova have a lot of cool system for you guys to be used. We have over 90 technical indicators that can be used. Traders can directly trade from chart. You guys can also trade both local and foreign products on the same platform itself. So if you guys would like to try out and know more about our platform, you guys can scan the QR code over here to register for a free demo account lah. Okay, for clients who are interested in stocks, we also have our own platform, which is Poems Global 2.0. You guys can find this on the App Stores and also the Google Play Store. And for CFD investors who are interested, we also have our own platform, which is the Philips CFD Trader. It's very user friendly to be used for traders. And yeah, investors do keep track on our social platform, as we have our company will have ongoing promotion from time to time lah. So right now, this Trade and Earn with Philip is one of the campaign that we are running right now. Trade and Earn Philip is basically like the more you trade with us, the more rewards investors can get from us lah. We will reward our investors such as iPad, iPod Pro, Apple Watch, and also Touch and Go reload pins. But unfortunately, this campaign is coming to an end soon. But don't worry, we will create more campaign in the future lah. So you all have to follow our social platform very tightly. We will update most of our promotions and campaign over our social platforms. Okay, so without any further ado, let's welcome our speaker for today, Mr. Anwar, who is a professional dual license dealer in Philip. So I believe that you guys are in good hands today, as Mr. Anwar has vast experience in the financial industry. And he's also a holder of bachelor's degree in investment management back on his uni days lah. Okay, so yeah, I will pass the floor to you now, Anwar.
Hi, okay, thank you for a very friendly introduction, Cherry. Welcome guys, my name is Anwar. It's introduced by Cherry just now. I'm a dual license at the Philip dual license dealer in Philip Capital right now. We hold both futures and stock market one. Okay, first of all, I want to thank you for every of the participants today. Thanks for your time. I know this is a weekend where most of us want to go to the holiday. Christmas is coming, end of year, school holidays and everything. Thank you. I'm very honored to be a speaker today to present to you what we call the other product of derivative. So which is CFD, and how we can leverage this product into your investment portfolio. Then let me share my screen. Okay, can anybody see the slide right now? Cherry, can you see the slide right now, Cherry?
Yeah, I can see the slide.
All right, okay. Okay, let's go. We study this, I try to share with you guys as much information as possible. How can we evaluate CFD in your portfolios? Okay, first of all, just Cherry presented just now, we have a disclaimer. Whatever I'm sharing today actually is only for educational purpose. It does not mean that I'm giving you buy calls or anything. And as per Cherry mentioned earlier, if you want to start investing and everything, please find a professional helps to get you started, everything. Okay, the first that we have a brief refreshment about what is CFD actually, or what we call the real name is contract for differences. Okay, contract for differences. The simple meaning of it is a contract made between two parties, which is a buyer, maybe you guys, or a seller and a seller. The two parties is actually one is investor, the other one is CFD provider. In this case, it is our seller, Philip Capital Berhad. Okay, when you enter a contract between these two parties, it is to settle the differences between opening and closing price of a certain financial products. Okay, in this case, we in the Philip Capital Berhad, we offer two kind of CFD, which is stocks or commonly known as CFD shares. The other one is CFD index. Okay, when you trade in CFD, just know that even though you are trading stock CFD, you did not actually receive any ownership of the product itself. You are only trading the prices, the contract prices, which is the opening and the closing one, the spread and everything. Okay, with this form of trading, you are actually getting the exposure to its price movement. For example, just to give you a short example, you are going long on CFD, you are anticipating stock, maybe I guess an example is Apple, and Apple stock, you have the view, you have analyzed that Apple is actually going up. So when you long Apple CFD, you did not actually receive any ownership of the stock. However, you are entitled for the price exposure, still entitled for dividend. All right, but you did not have the ownership, so you won't have a voting right for the share. Okay. All right. Before we proceed more on today's topic, just sharing here because yes, like we shared earlier, a CFD in Philip Capital, we offer share and index. So most of us actually trading shares and everything. So what's the differences again? Let me show you. As you can see on the slide, you have no ownership on the CFD trading. You have no voting right, but you still receive dividend, and you can trade CFD using leverage, meaning that you have the lower initial outlay compared to trading in stock. For a simple example is you are trading stock Apple again. I'm just using Apple right now. Apple, maybe 1,000 unit. The price is maybe around 190 something. So you have to pay the full value of the the Apple stock that you are trading. That's not the case for CFDs. This is a leverage product. You only pay the initial, the half. In this example, is 10% of the full value. Okay. So in CFD right now, you can trade both directions, which is the long and the short. But I have a disclaimer. This does not work for CFD shares in Malaysia. In Malaysia, we can only long for right now. Okay, as of now. So the other thing is financial charges. Yes, CFD have financial charges. Why do I put it here? Actually, this is a very important factors that you need to consider before trading CFD. This is depending on your trading style as well, which I will share after this what kind of strategies or style that you can use when you are trading CFD. Okay. All right. So know yourself before you start trading in CFD. The first thing, the very important factor when you are considering CFD trading is you must know the pro and cons of CFD investments. I won't share so much detail of the CFD investment today because actually we have a time constraint. Sharing it actually takes a while because we need to talk a lot about it. So if you are interested, yes, you can contact our dealers. As you can have as shared by Sherway just now, we have a branch all over Malaysia. You can call us and everything. You can ask us beforehand what's the requirement for you to start investing in CFD. And maybe you want to get some advice from them. Is CFD is the right product for you? Okay. So if CFD is the right product for you, where you want to benefit from a large investment universe, but this means that due to the leverage and everything, you are actually paying a small initial outlays, but you are putting full exposure of the value itself. Meaning, if you are in the right your analysis and your opinion about the stock or this index, you can actually get an amplified return instead of investing in, let's say, for a stock. That one, I think, need to share my other details. Last week, actually, we have a CFD webinar as well. I have shared about this, and hopefully that this thing, if you're not sure, as I said, just contact us. Okay. Most of the traders that trade CFD actually they trade on a short-term basis. But is that really the case? Okay, that is what we are going to talk about today and everything. Okay. So let's, without further ado, let's start with the first one, the short-term one. Short-term trading strategies of CFDs. Okay, in here I will share actually more on the trading styles instead of trading strategies. And the trading style, and then you know your trading style first. And then only then you can know what strategy suits you better. You need to test this by yourself actually. But today I will be sharing an example of strategies that you can do according to the style that I will be presenting to you guys today. Okay, short-term trading is actually used by active trader because active trader, the word here is trader, because active trader look for short or medium-term opportunities, as you can use your initial capital to check several opportunities compared to investing in an instrument for a period of time, meaning you can access more opportunity instead of holding for one position for a long time. This is what we call the short-term trading. So short-term trader naturally, yes, will use technical analysis more, as we believe that this is the operating factor that they decide the market situation in the short term. So there are a lot of trading styles, like I said, that can be implemented when trading using CFD, and one of them is actually day trading. Okay, what is day trading? Day trading actually means that you are buying and selling a batch of securities within a day, or even within a second actually. Okay, it has nothing to do with investing in traders in a sense. No, they know the difference between trading and investing. That's what it means. So it is exploiting the inevitable up and down of price movement of the underlying that you are holding during the trading session and everything. So the trading, in a sense, means that you rarely hold your CFD trading position for longer than a day. Yeah. So day traders actually tend to place many CFD trades during a trading session, focusing more on the more liquid, volatile markets, because this is the most important factor because you are day trading. If you are investing in a stock or something like the index that doesn't move much, it's actually very hard for you to make maybe profit, maybe can lose easily, or just don't have anything. If it doesn't move, it's don't volatile. This is more important thing that you need to understand about day trading. You need to find an instrument that is very volatile, so you can have your own strategy analysis can be settled within a day. Okay, so to be a day trader, this is a few what we call characteristics that you must have or you can develop, which is the first thing first. Like I said earlier, knowledge is everything. Your knowledge comes before your experience. Yeah, because experience will come with time if you are investing more than 10 years. Of course, you should have more experience than a new trader and everything. Okay, because if you attempt to day trade without any understanding of the market fundamentals, can tell you losing money is will become a habit for you. So working knowledge of technical analysis and chart reading is actually a good start if you want to start day trading, learn more about the technical analysis, chart reading, the indicators and everything. However, without a deep understanding of the market itself and its unique phase, chart also can be deceiving. So what I mean here is, yes, you can learn every indicator possible, every chart pattern, every technical analysis available right now. However, it is advisable for you to take factor also about the fundamental analysis. Know actually what is happening in the market, the current environment of the economy. So then you can decide or make a decision when you want to start investing in certain market or maybe even stock itself. Okay, so the trader actually need sufficient capital. Okay, because once day trader use only this capital that they can afford to lose. Don't be a gambler where you put all your money and invest being a day trader and everything, right? That one, because what I can say is the reality is there is nobody that can have 100% win rate when they are trading. So you must know that yes, there's a day you can profit more on your trade, and there's also a day when you can lose more than your initial capital. So an overloss and everything is possible about this. Okay. So actually a large amount of capital is often necessary to capitalize effectively on intraday price movement, which can be in pennies or a fraction of a cent. So the larger capital you have, actually you can what we call you can gain more lah rather than you trade. Just for a simple example, the capital of 1,000 versus the capital of 100,000. There's a difference because the movement of intraday is usually in pennies, like I said, in pennies or fraction of a cent. Okay. Okay. The third characteristic, you need to have a strategy for this. So you cannot just go inside the market and speculate everything without knowing or without having any strategies. Strategies can be different from each trader, no worries about it. There is no right or wrong strategies that you can use as long as you have tested your strategies and everything, and if it suits you, then it's a good strategy for you. You should implement this in your trading. So whatever it is, backtest your strategy first. Try to use it, and if it doesn't suit you, maybe because some people have a different commitment. Maybe some of them are full-time traders. Some of you maybe still working under employment and only invest in the trade on not the whole day where you need to look at the screen all day. So some people have different commitments. So strategies would be different for every one of them. Okay, so you need to refine these strategies until they produce consistent profits and can limit your losses. Okay, the fourth one. This is actually one of the what we call very important characteristic to become a day trader. You must have a discipline. Okay, even though what I mean is that like I said earlier, there's no 100% win trade. Some of you will experience losses and everything, right? So many the traders actually end up losing their money because they failed to make trades to meet their own criteria. Meaning you have set the strategy, you have set the stop loss, the TP and everything, right? But you didn't follow whatever strategy they are using. So if that's the case, this is not really suitable for someone that want to be a day trade. Do not use what we call technique harapan. If you ever heard of it, harapan, which is hope. You are hoping that these losses can be recovered tomorrow. Even though this is a day trade, because you hope that this thing can be covered, you hold your position, and then if the market goes against you, end up, you are losing more money. Instead of you are following your strategies where you know where you can stop your losses, where you can get your gains as well. So just as the saying goes, you need to plan the trade and trade the plan. Success is impossible without discipline. Okay, guys. So, okay, this is one simple example that you can use in your day trading strategies. This is what we call. I'm sharing this one because this is good for a new day trader. It's not maybe that high risk or everything. everything, high or low risk lah. This is what we call medium risk. For me, it's a medium risk, but you know lah, medium risk, medium return, everything. And this one can be learned quickly where you are trading news strategy. This strategy seizes trading opportunities from the heightened volatility that occurs around news events. Okay, for example, here I share one screenshot on the below of the slide, dollar struggle on Fed rate cut expectation. Yen back and forth. What you can see here when they say dollars struggle on Fed rate cut expectation and everything, you know that most of the investors try to go for the others market, meaning others market, emerging market at this country. So they change their position instead of investing in US and everything. They start to go for emerging market. For example, here in Malaysia lah, they try to go for more growing market because they have an expectation that yes, rate cut is coming. So lower cost for borrowing for everybody. So companies maybe or can invest more, can take more borrowing from the banks and everything to do their R&D, expand their business and everything, right? So should be a positive news. So this is what trading news is all about. Okay, day trader usually are attuned to this to events that cause short-term market move. Trading based on the news is one or two probability, as I mentioned earlier. Okay, so schedule announcement usually this is easily available and you can find it on the internet itself, such as the economic statistic, corporate earnings, the interest rate just now, subject to the market expression. Whether this announcement, everything, data, everything, is it meeting the expectation? Is it suitable for the current economic environment? You need to analyze this kind of thing. So when you see a news like rate cut, we know that interest rate is going down and everything. Short-term movement would be there. Usually in this current market situation, rate cut will boost the stock market and everything. So visiting stock market, you can find which stock that are suitable for you, that you want to invest in, you want to trade in. Actually, sorry, not invest in, trade. Yeah, that's trading news. So actually, when the market reacts to the, like I said just now, the last sentence that I put there, market react when those expectations are met or are exceeded. Usually, if sudden is near to move, which can greatly benefit the traders. Okay, that is trading news. This is one of the simple example I can give to you. The strategy, if you are using day trader style, okay, you can try to find another strategy, maybe technical analysis strategy as well. Can the chart and everything, you see the what we call price action, everything. Scalper can be a scalper for this day trading strategy, day trader style. Okay, the next you can do is swing trading. Swing trading is actually a very popular trading style by trader because they aim to take profit from short to medium-term price movement. Swing trader usually hold position for a few days, depending on their strategy, or maybe can go for a few weeks because they believe the direction would be in their favor lah. Okay, and they seek to capitalize on short-term swing rather than long-term trend because that is what swing trader do. Long-term is a bit we call exposed to more risk lah. So they try to ride the trend, the short-term trend or medium-term trend lah. So strategy involve trader buying the security when they suspect that the market will rise, or even selling with the short and except when they suspect the price will fall. Meaning you can go both direction, in this trading style. Okay. So swing traders usually take advantage of the market fluctuation as the price swings back and forth like a swing, right? Back and forth, so that you can analyze maybe these securities, these assets and everything being overbought or oversold. Okay. So this is what you can see lah, the price movement here. Okay, this is a very simple example for the when you see a chart lah. Okay, you can determine the support line here from the previous price and everything. So if you believe that this price is actually have reached the support line, you can enter your position here. So when you expect it will comes up, goes up and everything, when you think this is where you think that the price is maximized one, you can sell here. Close your position first, Maybe you can enter short here, because you know this price must be going down, trying to go to the support level again. Okay, and so on lah. This is just a few, not a few. This is just a simple illustration on the chart where you can find the swing trader, how you can use swing trader style to invest. Right. Same goes to day traders. Swing trading also have their own unique characteristic, where the first one is time frame. Swing trader actually focus on intermediate time frames, unlike day trader, who close their position before the end of the trading days. And position traders, this is another trading style, but usually it's for long term lah. Then position trader maybe keep their position open for months or even years. This one I will share as well later. Next. So swing traders hold the position for a few days up to a few market at most lah. So the flexibility, swing trader can go with or against the trend. For example, trader might attempt to buy a stock on dip when it's trending higher, but close the position after a few days instead of riding the trend for months. Meaning they know that, for my previous example, instead of holding it here, even though they know the trend is maybe going out, they just close it here first, because they know that, yeah, you can have, you can short this thing, you can take advantage of the correction to short the position and get more profit lah. So swing trader also can go against the trend that I said just now. Okay. So usually technical analysis is commonly used by swing trader. Yep, technical analysis, as you need to determine the support and resistance level, the range, the indicators you can use lah to help you to find the entry and exit points. Like you can see on the chart, this is a very important part lah of the technical analysis when you're using swing trading. You need to know when to enter and when to exit. Okay. Okay, diversification is when the swing trading strategies can be applied actually in every asset class. Yep, I think this one is is very on point. Yep, swing trading can be used in anything. Maybe stock, commodities, bond, cryptocurrency, forex, also CFD lah, obviously. So, however, swing traders tend to focus more on instruments that have a reasonable level of volatility. So maybe, yes, I shared about the cryptocurrency, but you must know some of the cryptocurrency, what we call the layman term, they call it a shitcoin and everything. Some of them did not have the volatility, so that one you cannot use for swing trading. This is just an example. I'm not saying you should go for crypto and everything. Just for example. Okay, so this is the thing you need to know. You need to find the right instrument first before you start trading. Okay, the other swing trade. This is the swing trading strategies that you can use lah. This is just a simple example. I just give you three. What we call this. The first one is stuck in a box, where you trading in a range market. As you can see there, you can obviously see the support resistance, so you can determine when you are going to enter the position or when you are going to exit. The second one is catching the wave. This is trading in a trending market. Right? As you can see there, same as well. You have for this example, I'm putting the 50 days moving average lah, so you can see the trend there. Okay, and the last time is the Fed move, meaning you trade against the momentum, like from which I shared earlier. Yes, you know that the market is trending upward, but you believe that this price point is actually a good entry place for you to go against the market, and then may close the position later, and yeah, you can repeat back your strategy that start catch the wave and everything. Okay, so in a sense, right, CFD is very suitable for short-term trading due to its features lah, which is a leverage product where you need only small initial outlays and it may amplify your gains. So yeah, this you can see this is the common sense. Almost everyone, if you ask everyone that trading in CFD, most of them will say, yep, short trading is the way to go. Why are they saying that instead of overlooking the long-term trading in the CFD? There's a reason for that. So Yeah, this and for the short-term trading lah. So next thing, the next one is I will try to clear the misconception of long-term trading in the CFD and why actually people says that CFD short-term, CFD short-term. Most of them won't even mention long-term trading for this. Okay. So long-term trading with CFD, as you know, as I said earlier as well, CFD is a leverage product, which means that trading are done on margin, okay, where you actually borrow money from your broker. When you are borrowing money from the broker, of course, there will be an interest charge for you for the position you hold, okay. So the interest will be calculated on daily basis, meaning that the longer you hold your position and everything, it's day by day by day by day, the interest will mount out. This is what the point or the factor that most of the people saying that CFD is not for the long term due to the interest rate charge or financial charges. Yeah. For example, you are holding for the whole year, long term, right? For the whole year of this position, you will be charged for the 1 year with the what you call interest lah. Okay, this one usually will mount out since it's a daily basis. You know, it will memang what you call will be a high cost of financial charges. This may affect your profit and everything if your trade didn't go your ways. Okay, all right. So the logic here tells us that long-term trading with CFD is not eligible due to this. Okay. All right. Long-term trading with CFD. We must know that we are doing what we are doing to start in trading. What I mean here is yes, since we are aware that CFD, if you hold position for a long term, you've got to pay the interest charges. You need to know whatever it is that you are trading, even if not with CFD. Maybe you're trading futures, maybe you're trading stocks. You need to know actually how this financial instrument works, how you are trading with it, how the platform helps you, how the platform charges you and everything. So actually this interest actually can be treated as just another factor to be included in your trading plan. Okay. All right. So just for sharing purposes, you can see here the trade, what's differentiate between a successful trader and unsuccessful. This is the general, doesn't mean that what everyone says here is true. But as you can see there, successful traders have an effective trading plan. Understand the risk that you are playing at when you're involving in some investment or some trading and everything. That's why I said you need to know anything before you start trading, anything about this instrument. Want to know when you want to trade with CFD, you need to know what is the charges for CFD, what kind of product are allowed being traded in CFD in Malaysia. Can you trade in foreign CFD? Yes, that's easiest lah. Because we Philip, we actually offer you guys the share from New York Stock Exchange and Nasdaq. Just now, we also provide indexes and also Bursa Malaysia lah. So for Bursa Malaysia, actually we was from FBM 100, the top 100 companies, but not all of it lah, because there is a certain criteria set like AC for which company can be listed as the CFD instrument. Okay. Hold on, let me drink some water. Alright. So I'm just talking about the interest on the CFD and everything. So here actually you can see I'm sharing with you guys the financial charges if you are holding CFD in Philip. This is the charges that we give. We charge you lah. Okay, the charges actually a few point above PLR and everything. Charges on total value of your position. The total value is not just your initial value, it's the total value. So for Malaysia shares, if you hold, we have a 7% of the share value. There should be financial charges per annum, but it will be calculated on a daily basis. And then foreign share is 8.5%. Same goes for the indices that we are offering, 8.5% of the contract value. It is the same interest amount whether you long or you short here. So when you know how much actually the broker, in this case our side, charge you for the holding your position in CFD for in long term lah. So you need to you need to understand as well that CFD is a leverage product. I said it multiple times already, it is a leverage product. So in this example, if you take a long position and your research and instinct is correct, you can profit handsomely. Yes, because the leverage product will amplify your returns lah. So in example, let's say you have only 10% of the value of the underlying security to pay open. This is now initial value is small. If the value goes up 1% per month, which on trending stock that maybe stock on the indexes that you are investing right now, that will be for the whole year, you hold holding for whole year, that will be at 12% per year. This is a simple mathematics. We ignore the compounding. If we talk about compounding everything, this will be a very long talk. So you know that 12% as compared to before, which is 8.5 or 7%, is higher than your higher than the financial charges charged by you. You know that you will be in the money during that time. Okay. This is just a short example. This is how actually long-term trading can be used in the CFD. Maybe, yeah, people said, like I said, common sense is, they said that CFD is for short-term because they are afraid of the interest rate. Just now, I just shared to you guys, actually, interest rate, yes, it's there. But if you already factor in the interest rate before you start your trading with CFD, you have a firm belief in your skills, in your instinct that this product, this instrument, this underlying will go in the way you think it is, then why not consider about the long-term trading? Okay, for the trading style, we share about the position trading lah for today. For the long term, so excuse me. Right, position trading is a strategy in the financial market in which investor, you guys, takes a view that investment for long term and put their money into the assets or the underlying for the underlying of your choice of your strategy. When you analyze and everything, you analyze this, maybe index is good, maybe this stock market Apple maybe is good. You try, you know that they have a proper direction, maybe they want to go up, everything, right? So you believe in your analysis, you go in, you use the position trading style. So what you want to, what your objective is, you need to gain from the price fluctuation of asset in the market and tell to hold on their position for days, week, month, or even years. Okay, this position trading you can hold for a very long term. So the entire process involves a lot of patience, yeah, and a strict conviction to the markets and your own analysis. Why did I mention that patience? Because yeah, you are holding a very long term. Let's say, for example, you are holding 1 year. You are exposed to 1 year worth of risk. Meaning, yeah, sometimes you will see your portfolio will be in a very rare position. Right, very rare. Meaning that you are losing the money a lot. But you need to be patient and trust in your own strategies here. So, and because of that, actually, this style actually requires a significant amount of capital, and the capital will be locked for a long time because sometimes it will not show in the price movement for many days or even months. So normally for position trading here, your stop loss and everything is quite large because to prevent, you don't want your stop loss to be hit first before the time comes when you believe that this instrument will go up, maybe in a year compared to the current price lah, something like that. So you must have a lot of patience using this kind of trading style. So the advantages for position trading, comparing to the short-term one, positional trading is less risky than swing trading and day trading because a long-term element is involved. Yeah, I said earlier you have a 1 year worth of risk. However, since this is a long-term one, you believe in the direction, you know that your instinct is correct. Yeah, it can be less risky than swing trading, but it depends lah. If you did not understand how to use position trading or even swing trading, anything will be more risky lah. So the very important part is know your strategy, have a great knowledge first, if you have an experience, it will help a lot of in your trading style. Okay, there is less stress when you are using position trading for trader that's also comparing for the short term, because position does not need to be monitored on daily basis or even hours. Some of the short-term trader, they can be stuck in front of the screen for the whole day. For the whole day. So like I said, different traders have a different commitment. Some of them are full-time traders. Some of them maybe have a full-time employment. So this, for those full-time employment, I don't think it's possible for them to monitor the market very frequently, because you have your own jobs to do. Everything you cannot do leave your job just because you want to trade, right? So this strategy, this trading style may be suitable for some people like that don't want to spend their time looking at the screen, looking at the price, chart movement, and everything, right? So they have more time to spend on other transaction or other professional activities. Yeah, maybe you like to you like to have a holiday and everything. This is a good trading style where you can jalan-jalan and everything, right? But still, your position is there, but you don't need to monitor very frequently as compared for the short-term trading. So this strategy is what we call a bit chill, so a bit chill, not that stressful, not that time-consuming. As long as you keep up with the news and everything, economic factor that might impact your position, position trading is the way to go. Okay, and actually, this position trading can use both the importance of technical analysis and the fundamental for me from my personal opinion, it was equal, the importance of it. You need to know the fundamental, right? You need to know where the market is going, how the news, everything, how the event, how the economic affect your position. Okay, that one you need to be aware lah. Okay, and then the technical analysis, you may know. You can use that to know when you want to enter this position. Is this the right time to enter? Is this the right time to exit? How much stop loss the stop loss that I need to make? When can I get the TP? Okay, that is the advantage of this internet. But there are also disadvantages. Yep, disadvantages. What you call the big disadvantages for this one is a lot. When I said a lot, it's a very lot. Capital is needed to keep position open for a long period of time. A trade can be, like I said, last for months, even years, and the capital will be locked. If you don't have a lot of capital, meaning that you may lose the opportunity to invest in another or trade in the instrument. If you put all of this thing or put all of your capital into position trading style. So actually, position trading requires skills in analyze fundamental of the asset, which I believe many technical analysts do not possess. This is only my personal opinion. Please, it's not a fact. This is just an opinion from my side, from the client that I've made, from my friends and everything. Most of them did not usually will overlook the fundamental side. Okay, so just as I said before, cost of mistake actually is higher in position trading as stop losses are wider than in other trading form. So position trading works best in trending up and down market. So one can make profit and taking position trades. Cannot if you find some instrument that moving sideways, that is not a good choice for you to have a position trading style. Okay, the simple one. Position trading style strategy you can use actually for support and resistance lah. I believe most of us know what is support, what is resistance, when you can enter, when you can exit. This is just an example lah. But as you can see from the chart that I shared here, you can look at the timeline here. Actually, it's a very long one. So July, this is October. So you can see, so you can maybe take your long position here, and take profit here. Simple strategy, support and resistance. Okay, so support and resistance level help position trader recognize when an asset price movement is more likely to fall into a downward trend or even increase into an upward trend. A support level is the price and asset that will not usually fall below as buyers tend to purchase the asset at this level. Conversely, resistance is the vice versa lah. Okay, so three main factors to consider when you are trying to identify support and resistance level is historical price, previous level of support and resistance, and even technical indicator. All right. So as I've talked, I've been blabbing about this one. Just because CFD usually used in short-term trading doesn't mean that long-term trading should be overlooked. Right? What I shared previously. Yeah, interest is the main factor, but doesn't mean that you can completely overlook the long-term trading using in the CFD lah. So one advice I can give is, if you cannot make money on long-term trading, short-term trading is just a quicker way to lose money. So gain a lot of knowledge before you start trading in any instrument, actually, especially when you are trading in leverage product and the derivative product, right? Because the risk there is higher comparing to the stock market. Okay. So as we shared before, we can that Philip actually providing index CFD. So you can actually trade CFD index here, and there's a way lah. There's why should I trade index when I can trade stock, when I can trade futures, when I can trade stocks, most of the thing lah, maybe crypto, everything. But we have the option to trade index. So here I will just say why we can trade index and why you need to consider index in your portfolio. Okay, using the CFD lah, obviously. So index trading is actually the buying and selling of specific stock market index, which is where traders speculate on the price of an asset, maybe it rise, maybe it falling, which then determine whether they will be going long or short. Okay, and index, as you know, represent the performance of group of stock. And trading indexes does not mean that you are buying any actual underlying stock to take ownership of. Instead, actually you are trading the average performance or price movement of the group of stock. It is a great way to speculate, actually, yeah, the performance of overall stock market for a country lah. Let's say if you trade index NASDAQ, okay, you can check the performance of the stock market, US stock market. Okay, it is less risky compared to trading individual company. Why? Because yeah, individual company, let's say you are trading 10 stocks that are listed in the S&P and everything. So this, if you are investing your money in individual stock company, everything, each of them have their own risk. So actually the risk, it is become more risky lah. Maybe something happened to this company, maybe affecting the other company as well. Maybe it might be positive or negative. That depends on the events lah, right? So right now, if you trade index, you hold a group of it. Some of the risks actually can be can be neutralized by the other company. Maybe this event will affect company A badly, but it will affect a very good impact on company B. So actually this risk will be neutralized in a sense, yeah, neutralized, because they allow the diversified exposure as most factor that affect single company may be nullified by the other company in the index. So factors affecting the indexes, yes, this is what we call I would say the characteristic of the indexes lah, because index is, as we know lah, it is what we call a benchmark for stock market performance in the country. So global news, events such as natural disaster, the thing that we experience a lot lately is our political instability. Everything affected the indexes. So it could be confined to only one country, maybe, yeah, or it could have a global impact. Maybe like a war right now is very, yes, we know about the issue of Israel and Palestine, everything going on there actually kind of affecting a bit of stock market to the stock market. Okay, so economic news as well will affect, obviously will affect the indexes. If a central bank rate decision for here, For example, the data, NFT, trade agreement, and employment indicator can have a major impact on indices. Some could be specific to only one index, some lah, but there's a lot of cases that will affect most of the index. Okay, index reshuffle. This is the thing that what we call a good thing when you are investing in the indices, because when a company stock is added or removed from stock index, it can impact the price of the index. Generally, a reshuffling of the index is beneficial for investor because it ensures only relevant company remain part of the index. Okay, index. Sorry. So, for your understanding, just let me put it another way. If a company A is not good enough, it will be kicked out of the, not kicked out, it will be reshuffled by another company, maintaining the blue chip status in the index. Most of the index consists of blue chip stock. So we know that we invest in a group of blue chip stocks. And that is when we reshuffle. We need to, some company maybe perform well for the past 10 years, but maybe for the next 2 or 3 years they are not performing really well. We cannot call them blue chip stocks anymore. Then the index will reshuffle this. They will find another company that can be after met the requirement to be listed in the index. So this is good. Okay, this is good for investor. So you don't need to actually to monitor one by one each company in the index. Rather than you just keep track of the performance of the index itself, because because the index will reshuffle the company. So yes, obviously company news will affect the indices. Okay. So again, why we trade in the indices? Actually, because trade with the direction of market as a whole. For example, if you expect that the US is heading to a recession and that domestic stock market will decline, it will be inefficient, inconvenient, and expensive to enter short position on many individual stocks. Instead, you could place a single CFD short position on the S&P 500. S&P 500 is just the example here, and profit from independential downturn in the index. Okay, it is a basket of blue chips company, as I said earlier. So most of main index consisting of blue chip stock, meaning once you take position, it basically means that you are investing in blue chip group of stocks. Okay, it is almost impossible to analyze each stock. Yep, almost impossible. But if you have the time, you can analyze all the stocks in the index. But I know for sure I don't have the time to analyze each of them. Okay, so it's because it's time consuming. Even if you want to analyze one company, also taking a lot of time. Imagine trying to analyze all the stocks listed in the index. Okay, so because of this, it is almost impossible to go zero when you are trading in indexes. So availability of data and news. This is the great things about indexes, because the data and news are usually readily available because they are the benchmark of stock market performance. Okay, so familiarize yourself with the news headline, because it is constantly updated. On a daily basis, you can see even before the market open and after the market close, there will be a news about the index itself. So you can actually have a better analysis before you before you start trading the indexes. Right. Trading the indexes also allow you to gain exposure of the specified. This one I talked about today when I was spending around. Right. It also actually offer flexibility in terms of trading strategies. The ability to go long and short means you can take advantage of the stock indexes falling or rising price. Many index trading products, such as CFD, what we are talking about right now, offer leverage, allow you to control a larger position with a smaller amount of capital. So trading indexes also can be used for hedging purposes to offset potential losses in other parts of the portfolio. Just for short example, you have a stock-heavy portfolio. You can use the index to hedge against the overall market downturn. Maybe you are most of the portfolio you hold is S&P, right? Oh, sorry. Actually, we have a hard time. As just for example, you hold a lot of stock of company stock in S&P, you can hedge by buying or going long or short in the index, or I'd say S&P index. Okay, so the summary for all what I talked today, what I share today to you guys is actually you need to get a good trading education. Because it is very important. Yes, I share about day trader, I share about swing trader, positional trader, long term, short term. In the end, you yourself actually need to find a suitable strategy, suitable style that meet the requirement of your lifestyle before you start trading. So don't be shy. Yes, we also Philip also always having a seminar, even technical analysis shared by Cherry just now. Yep. If you have a free time, come join us. Just learn everything, anything that you can learn. Yeah, guys, there's some okay. So Cherry, I pass it back to you. Hey guys, thank you for joining this and have a happy festivities season and happy new year. Cherry, okay.
Okay, thank you, Anwar, for your sharing session. I hope that the attendees who are here today managed to learn a lot, as Anwar is actually a very experienced dealer in our company. So right now we'll move on to the Q&A session. So if you all have any questions, you all can let me know, and I'll pass your questions to Anwar. Okay, so yeah, Anwar, we have a question for you. So I think this client he joined. I think this attendees he joined late. His question is, do we get dividend for buying stocks on CFD?
Can you hear me?
His question was, do we get dividends for buying stocks on CFD?
Yes, actually there's a dividend adjustment. You can get the dividend, let's say if you are long position of the stock, you will get the dividend adjustment. But if you are short, actually you need to pay the dividend back to CFD provider, which is us lah.
Okay, so we move on to the next question asked by one of our attendees today. Since CFD can't be short for Malaysia shares, would you recommend investors to trade Malaysia stocks using CFD?
That is depends on your own analysis. Yes, like I said, the differences for CFD and stock, right? CFD is a leverage product. So in this case, if you believe company Maybank, maybe I just give an example, Maybank, you believe this Maybank will be going very strong next year. So yeah, you want to invest in them. So CFD, since it's a leverage product, allows you to have more higher exposure because, like I said, you know lah, leverage. You need to only for Malaysia, if I'm not mistaken, it was 10%. 10% of the full value of the Maybank stock lah. They say right now you have a capital of 10,000 ringgit. Just for example, 10,000 ringgit. You can only invest the 10,000 ringgit value lah if this is directly in stock market. It's a different case for CFD. 10,000 ringgit, you have a full exposure of 100,000 ringgit value of stocks. So that then it depends on you actually. How do you want to proceed using this strategy? Yep. Malaysia one for now, as of now, we know is short is not allowed, but you maybe can explore to the other foreign stock. Like we said, we have offer on stock that are listed in New York Stock Exchange and even Nasdaq.
Okay, so we'll move on with one last question. What is the minimum deposit that are required for us to open a CFD account with Philip?
What is the minimum? Yeah. If I'm not mistaken, it is 1,000, right? Okay.
Yeah, I think it's 1,000 also.
Yeah.
So hold on, let me.
Yeah, opening account. Never mind. We will confirm back the account to you guys, but I believe it is 1,000. Cherry, can you just take the client phone number or something, or can you sir or ma'am leave your phone number so that we can talk more about
Yeah,
this?
yeah, sure. I will, once we confirm, we will let you all know. I will get back to the attendees. Okay. So
Okay.
yeah, this basically marked the end of our Q&A session. So if you guys have any questions, you feel that you still haven't, you feel you want an answer, or perhaps you need for more advice on these CFD products, you guys can actually contact us. You can firstly follow us on our social media. We have our own Facebook, social media, YouTube, Telegram, Indeed, Instagram, and also our own webpage lah. So for all the past seminar and webinar that we held by Philip, we actually upload them on YouTube. So if you guys would like to seek for some investment knowledge, some product knowledge, you can go to our YouTube and have a look to see if there's any topic that interests you. So over here, you can find our branches contact number and also our headquarter contact number lah. So if you guys have anything, you can drop us an email. You can actually drop by. You can actually call our phone number to see if to let us attend to your needs and helps. Yeah. So thank you everyone for attending today's webinar. We are very glad to actually have all of you here. So thank you very much. Thank you for your time, and thank you Anwar for sharing such an insightful topics to all of our attendees over here.
Okay.
So
thank you guys.
Before I end the presentation, I end this webinar, I would like to wish you all a happy Merry Christmas and enjoy your Christmas. Bye everyone.